Before we get started, I have a short video on TWR's birthday month promotions. Celebrate our birthday month with us and save some money and join TWR and come get some. After the video, check out some TWR HOP products and services. Last week was busy, so I can't cover all the alerts as all the platforms and the servers. We had over 1,000 alerts last week alone, but I'm going to highlight a few of the alerts, both positive and negative, so that you get both sides of the coin, and we'll see what kind of stuff was popping off last week. So hopefully, if you're not a TWR member, you'll go ahead and be like, man, these guys are doing something special over there. I need to go check these guys out. But let's go ahead and start out with this SPY trade. We went ahead and took an average down on the SPY trade. We like this one, 437 call. We saw what it was doing towards the end of the bell, so we went ahead and swung this. This is kind of a risky call, but at the price, it's very cheap, and it's well worth the risk going ahead, swinging over the weekend, looking for Monday volatility and a spike in the market, hoping for a gap up. Went ahead and took an average down on our October 4 YouTube trade. This one may end up being the one that gives us our first loss. It looked really, really good pushing in to this current last week. And then we had a big reversal in the market during midweek, and this started really suffering. So we went ahead and took an average down, got our average as low as possible, and we're hoping we get some bullish push into this week so we can go ahead and exit out of this and profit. And we went ahead and went all out in our Amazon trade last week. We went from 45 to 61 and then went ahead and hit that stop loss and put that at 51. So came out on Friday all green on that one. We averaged down on our YouTube 5 trade. This was Pepsi. It was struggling a little bit midweek, and then we got a nice pop towards the end of the week. We ended up liking this one, and that was exactly what we wanted to see for our average down. So we took our average from 43 to 33, and we're hoping we get continued bullish momentum in this particular ticker because their earnings were outstanding, and we hope that we can catch some wind on their sales, pushing them to the up, and go ahead and exit out of this next week in the green. Square was a trade that it was a good momentum trade. We ended up taking this 50 to 68. We pushed our stop loss to 55, which soon after that triggered because we were into some high volatility. And then Tesla was kind of a disappointment. We ended up losing half on that one. We thought we were getting the momentum that we were looking for, but it quickly reversed, and so our 280 call went from 63 to 33, and we went ahead and cut ties there, taking the loss and preserving capital. Listen, guys, losses happen. I don't care how good you are. If you are a trader for longer than I would say a week or a month, you know that losses happen and they come. The idea is to mitigate your risk and to preserve capital when you're trading. So that is why we add stop losses and we put ideas on trades for exit criteria. But we make it back. Our October YouTube trade number 2, Sava, we ended up cutting ties with that one, which was good because soon after we cut ties, this thing fell off the cliff because of a negative report that came out on the company. But we took this from 125 to 160 and we went ahead and closed it out. We left a rider since we had all the way out until January 2024, but that rider is of course a leap, and we'll see where it's at once we get closer to 2024, but we're not concerned with it because we made the main bulk of our money on the 125 to 160, and that is a fantastic trade round trip for money in the bank. LMT was big money for us. We went ahead and rode this off of momentum because of the Israel war kickoff. We took this from 170 to 255, put that stop loss on there, which shortly triggered after this, but that's a fantastic trade, and we went ahead and banked hardcore on that one. PLTR was a huge win for us. Look at this trade, man. We took this all the way from 88 to 310, trimming and walking the dog as we rode. But once that news of the Israel war kicked off, this defense name definitely started just rocking and rolling, man. And we were able to capitalize very good on this one. So we made a huge chunk of change on this trade alone. Ended up closing DraftKings. It wasn't doing anything for us, and it was so low it wasn't even worth averaging down. So we went ahead and just cut ties with this 89 to 13. You know, that's definitely a sting in the pocketbook, but when you look at that trade compared to what we just made with PLTR, you know, it kind of levels out where we're not really worried about that trade, which is one of the reasons why we cut it, because PLTR made so much money. We were like, you know, why are we keeping this piece of crap trade here when we just banked hardcore with this one? Preserve capital, move on to another trade that can make us some money. DraftKings was a cut. Okata, man, I got some hate for pushing this trade because this took a little time to mature. We actually had to do an average down on this one, but people were like, man, why would you even do that? And I told them, patience pays, and it definitely did. Look at this. We took the average down because we saw the levels. We were playing a strategic move on this one, and it paid out, man. 65, 190, walk the dog, trim a little bit, 220, cut ties, move the stop loss. Excellent trade. 65 to 220. Nobody can talk crap about the bank that we just made on that trade. Absolutely crazy. Serious Bank on our YouTube October number 3 trade. Google took this all the way from 125 to 170. Absolutely crazy. Anytime you make bank like that, you always ride the stop loss and just take what you get from there. And then Meta, man, what a trade on this one, and this was a complete flipper, and we were thankful that Meta popped like it did because we took this from 98 to 260, and that was a fantastic swing trade based off of a little bit of momentum and a little bit of luck as well. And then finally, I'm going to go ahead and give you BA, man. We took BA. BA was riding the bottom, man. It was consolidating from bottom. We decided to go ahead and take a rejection play from support, and this thing absolutely skyrocketed. And we were very thankful for this trade because this provided a great opportunity to make some hard bank. And we went kind of deep on this one. I ended up going 20 contracts on this one, and I normally like to keep it at 10, but this one was one of those high conviction type of plays, and I really wanted to bank hard. So we took this from 50, trimmed a little at 110, and then came all the way out at 286, and that was a boomtastic trade. And I'm glad for a lot of people who went with this on me, banked hard, and showed a lot of love and support in the chat groups. $100 to $1,000 per day is possible as a TWR market warrior. So quit wasting money that's not making bank and join TWR today. The link is in the description. All right, so your hottest news is talking about Dow Jones futures as they're rising as market is ready to face some key tests, and Tesla earnings are ahead, which is a big idea for a big mover and shaker. The rally that we had last week was mixed week, and it basically had a disappointing finish, but major indexes rose initially, but they hit resistance levels with NASDAQ leading losses on Friday, and the market breadth was pretty weak. The Russell 2000 reversed lower towards 2023 lows, and the tech leaders started strong but backed off with some volatility and actually did it quite suddenly. All this was expected breaker for the market rally, and investors should be cautious about new buys, with the market rally suggesting that earnings season picking up steam. Selling some recent buys may be warranted. Tesla is set to report its worst earnings in 2 years, but Tesla stock is held up to the bulls and it's looking for possible growth drivers. That's important because anything of a surprise based off of estimates will make this stock just absolutely explode. Some other key ones, Lam Research, ASML, they kick off the results for chip equipment makers with huge customer TSM, and they're reporting as well. The ASML stock is struggling a little bit, but LRCX and fellow chip giants AMAT and KLAC, they're setting up pretty nice. Oil Services SLB kicks off energy earnings season with an energy stock showing renewed strength, and SLB stock is close to an early entry. In addition to the Tesla stock, Lam Research and Applied Materials KLA and SLB, investors should also watch Artista Networks or ANET, Adobe, and NVDA as well. So wrapping this up, all three of the major indexes rose versus their fair value in the futures. The 10-year Treasury bond rose a few basis points, which is kind of odd. So we're seeing a little divergence kind of in. Normally, if the futures are rising up, the bond yields are kind of softening a little bit. So that'll be something to watch. Crude oil futures edge lower, and we need to understand that even overnight action on the Dow or any other instrument doesn't necessarily translate to actual trading in the next regular session. We really need to pay attention to what happens in pre-market to get the good idea of how the market will respond when that bell is rang. So overall, your market is bearish, your leader index is DIA, and your hottest sector is energy. The worst sector is technology, your top stock was Dollar General, and your worst stock was DoorDash. Here's your heat map of the S&P 500. You can kind of see what happened last week into how the market was reacting. A lot of the bigger names were pretty red with some sprinkles of green coming from some of the smaller sectors. Here's your sector heat map, and energy utilities were up big for the last week with consumer discretionary and technology as your laggers. I want you to go into this week paying attention to real estate and financials. Financials have a huge week with earnings, and it could be make or break for them. So if it's good earnings for financials, we could definitely capitalize with some decent gains by playing some of these financial names. Here's your sector rotation on a different type of bar chart, and or line graph actually, and you're seeing consumer services and technology starting to curve to the downside, while you're starting to see energy and a few of the other ones curving to the upside. Consumer staples, and it looks like utilities are starting to curve up. I like this chart because it gives you a line idea of where the sector rotations are happening, so you can kind of visually see the rotation of monies in and out of the market. Here's your biggest gainers from last week. You see Dollar General, PG, gold is one that we need to pay attention to. Some energy names like Devon, PXD, XOM, we're paying attention this week. And Wells Fargo, we're paying attention going into this week. So a lot of the energy names and the banking names are things we really want to focus on going into this week. Here's your biggest losers, and the big thing with the losers that we like to look for is bounces from support. So yes, could we get bearish continuation? Absolutely, but we want to start looking at some of these bigger names, specifically the ones that had higher volume in them, and watch for the reversal from support from knee-jerk reactions that happen on Friday. Insider transactions could be a legit reason for the buy on insider transaction, or it could be something they know that we don't that could be happening. So definitely noteworthy. Take a look at it. And if we start to see volume push into the upside, it might be a good opportunity for a play. And if you got insider buying, you also got insider selling, and it's a similar idea. Why are they selling? Is it just normal selling, taking some shares off the table, putting some money in their pockets, or is there a fundamental reason for selling? Example, TTOO got some heavy selling pressure on it. Why is that? We gonna look into that because that's a really popular ticker, specifically in the penny stock realm. So just an idea, food for thought when you're looking at some of these sells. It could be legit, and it could just be normal scheduled, or it could be there's some sort of fundamental reason why these insiders are taking bread off the table. Here's your flow, calls versus puts. Looking at it, we're a little bit more bullish than bearish. Also, we like to look at the sectors because we're noticing the Magnificent Seven over there as pretty much the big idea for the calls. And we got some big tickers on there for the puts as well. IWM is one of those, deals with the Russell, and we like to play with that one as well because those are the smaller and mid-cap stocks. Dark pool, nothing spectacular over here. Pretty much the normal, but we do see a couple new names we haven't seen for a while. So we're paying attention to HYG and IGSB. Other than that, it looks pretty normal like we normally see with dark pool type transactions. And here's some of your screeners that we like to use looking at most active. I'll go ahead and allow you guys to pause and take note of these, but most active stocks here, of course, you got the normal Tesla. What we're looking for is some of the unusual names because some of these names are always going to be on here. The unusual names like HYG and XLF is on here, that financial ETF. So we're paying attention to some of these new names as well as the old names. Most volatile screener, AVGO, Lilly, LRCX, KLAC. We like those ones for good spiking plays. A lot of these volatile stocks can move and shake 5 to 10 points on a given session. So those are one of the reasons why we like to play the volatility because it gives you a great risk versus reward and bang for your buck. Here's your screener for unusual volume. Noticing a lot of penny stock action, which is great because we love to play penny stocks, specifically on the TWR Instant Message platform. So if you're not on the Instant Message platform, might be a good idea for you to go hook that up, come over there and play some penny stocks with us. But other than that, we definitely looking like we got some good volume moving and shaking in some of these names. All right, so here's a screener for Golden Cross. And what we like about the Golden Cross, it means the short moving average crossed above a longer moving average, creating a Golden Cross and giving a good indication of continued pressure to the upside. So a lot of these tickers are looking like they want to go ahead and break out to the upside, which is fantastic for the bulls, especially if you want to go long on some of these. Now, there are some volatility that are associated, so you got to expect some short-term volatility, specifically once the Golden Cross actually hits. But usually, according to technical analysis, given the time frame, this thing usually will push and start breaking out towards newer highs. And if you got the Golden Cross, you know you got the Death Cross. And there's a lot more Death Crosses, which gives way to the bearish type of sentiment that's out there. And of course, the Golden Cross, if it was a cross up from the short to the long, the Death Cross is the shorter moving average crossing to the downside, the longer moving average, causing the price action trend to look bearish and towards the downside over time. So thank you, Earning Whisper, for giving us the most anticipated earnings coming out for this week. As you can see, highlighted in green boxes are the things that have my attention and I'm looking to make trades on and are expected to have decent movements for at least 3 to 10 points. Coming in Monday and Tuesday, you can see that there's a lot of bank names. I'm paying attention to Charles Schwab. I'm paying attention to Ericsson. Albertson is on my mind since they made that merger with Kroger. Bank of America we're paying attention to. And United Airlines, Johnson Johnson, Goldman Sachs, and a few of the other ones. Moving in later on the week, of course, I'm paying some attention to a lot of the other names, Netflix, Tesla, P&G, Abbott, and we still got some bank names that we're paying attention to, AT&T, TSM. Nokia is one that I'm really paying attention to because it usually has been one of those low moving at the bottom sideways things, but I just got a gut feeling that Nokia is going to give us something special this time. So I just want you guys to pay attention to it, man. I got Nokia shares long, and I think Nokia is a good thing. But for some reason, I just got this feeling, man, Nokia is going to give us something we're not expecting. And then coming into Friday, really the only thing I'm paying attention to is SLB and American Express. And that's pretty much closing out the week on earnings. And then the following week, we're going to start really getting into the heavy hitters. I did a basic screener of the most popular call options and put options out there right now. These are your call options. These are the ones that have the highest volume and the highest open interest. And you're looking at a lot of ETF names as well. IWM, the Tilt, C, Meta, and the TQQ. So these are good ones to pay attention to because these are relatively cheap, and a lot of people are looking at these hitting the target, and the open interest suggests that people are still in these for the win. Of course, if you got the bull side, you got to have the bear side. And this is the same idea, only with the bear side of the house. Highest volume, highest open interest. AMC's up there, C's up there, and a lot of the same tickers that you have are up there as well. XLF is a surprise one, though, because I would be expecting people to think XLF was a long type of play. So it'll be interesting to see if XLF plays to the short side or if it starts to pop with some of the earning reports from the financial sector. So it'll be interesting to watch. But IWM is one of them that I'm really paying attention for a bounce from support at bottom for a jump to the upside. This is a screener I did with a bullish signal for specific stocks. And as you can see, we got a whole bunch of names, and it's fantastic opportunities could present themselves on a bullish side of the house. Each one of these gave a bull signal moving into this week, and it doesn't necessarily give you the time frame of it. It just says that the pattern has meet criteria, and it's looking for a short-term to mid-term bull-sided signal. And same thing here, the screener for the bearish signal hit the criteria for a short to mid-term signal criteria, indicating bearish signal strength and continuation to the downside on these particular names. All right, so let's get into the charts. Here's how I do my charts. You got purple, blue, and red. Purple is our battle zone. That's where we're at currently. We're looking for the break up or down from the battle zone to give us the push we need for the high target or the low target. Blue is our high target area where we're looking for the continuation towards and potentially a break out above. And the red is our low target where we're looking for the push down towards the red target and continuation to the bear side if we hit there. Anything in the middle, if I see it, I'll go ahead and outline those when I do charts in orange, but mainly I stick to the zones, purple, blue, and red. All right, so let's talk about SPY coming out of the battle zone. We're definitely looking like a little bit bearish. We want to go down to the downside. Now, this could definitely change as a lot of the financial companies are inside of the S&P 500. If we get some of the boomtastic earnings on the financial sector, you could definitely see the jump. But right now, the inside bar inside of SPY is looking like it really wants to trigger to the downside. So I wouldn't be surprised if we start creeping to the downside to look at that 50-day moving average there on the 4-hour chart and even go towards that 427, 428 area before we bounce and come up to the upside. IWM, of course, you know this is smaller mid-cap stocks. We're looking at the battle zone, which has huge consolidation of support if you go back previously a few days. So we're looking for hopefully a bounce from support and the push towards the blue line, which would give us a great opportunity for a breakout. Again, a lot of these smaller companies are inside of the S&P, and you could see some definite moves if the S&P does fairly well in this start of the earnings season. Charles Schwab is consolidating pretty decently in range. We're looking for potentially to break to the upside. This is obviously they report before our earnings on Monday, so we'll get an idea of what they look like when the bell rings, and we'll see what we're going. This will be a good indication of some other type of earnings that we may see from some of the bigger names in this financial sector. Bank of America, I'm expecting to push to the upside. I think they'll do fairly well, kind of similar to JPM, and we'll probably start breaching our top level, hopefully headed towards $28 and $30 on this particular ticker. We got a pretty classic cup and handle. Coming out of the handle is usually to the upside. LMT, of course, this is a defense name, and it's gotten a lot of popularity since the a war in Israel starting to form a cup, looking for the break from the upside from the battle zone towards the 447 and then on its way to 450. Johnson & Johnson, we kind of got an ascending wedge here. Typically, this ascending wedge would break and we'd see a little downtrending pressure. So this will be interesting to see how they perform on their earnings call. If I were to bet, I would probably expect a little bit of run into earnings and then probably a sell-off through earnings, pushing it back down towards 155. UAL, I think, is sold off fairly decently, and I think is a good candidate for the bounce from battle zone towards the upper level and through. I wouldn't be surprised if they do fairly well on their earnings call and they push up to 42. Mainly on the airlines, the earnings will probably be pretty good. It'll be about the forward guidance, what they look towards in the future, specifically given the economy and inflation and stuff like that. JB Hunt deals with logistics and freight, and I think that they're going to struggle a little bit, and I'm fairly bearish on this one. I think we see them push towards 189, and I wouldn't be surprised if we go towards that red line there at the 50-day moving average. And in fact, this is going to be our YouTube free trade alert. It's our number 6 one for the month of October. And this is the contract I'm looking at. I'm looking at that 180 put, pushing out October 20th, and we're going to look to try to get this as close to the bid as possible. 85, I would love to have this at 85 or 75, and if we can find a deal when the market opens, we'll definitely take it. And Morgan Stanley is the final stock we're going to cover. I like Morgan Stanley for the break from here towards the upside, and in fact, I'm going to give you another free trade alert. We're going to go out swinging this week. So without further ado, this will be your number 7 free trade alert for YouTube in the month of October. And this is the trade we're looking for. We want to go ahead and buy Morgan Stanley, the $80 call. We're going to push this out till 27 October. And everything about this is what we like. Delta higher than theta. Volume is decent. Open interest is good. And we would love to get this and in the middle of the bid and the ask, closer to 125 if the market allows us when that bell rings on Monday. And now, please check out some of our hottest products and services. Join TWR today and learn why we are the best trading and investing platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Join TWR and let's go to war. Traders War Room is proud to present our hottest new feature, text message alerts, available now on the TWR storefront. If you enjoy trading and investing, you're probably familiar with some of these popular applications. These are all fantastic, but they can become overwhelming and difficult to navigate throughout the day. Add in the stresses of work, life, school, family, and you become frustrated and overwhelmed, missing opportunities. Guys, that's so me.
Yeah, that's me.
This stops right now. Welcome to TWR's text message alerts. It's super simple too. So we watch the market, and when we see a setup we like, we push an alert like this. You as a subscriber receive this. And don't worry, we give you an exit too, just like this. So for more information, check out our storefront, links in the description. And remember, when you hear this, Traders War Room is making you this. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this? Or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today The link is in the description or on the website at traderswarroom.com. Let's go to war.
In the traders war room, warring with the market every day we on Zoom. Never gonna quit, ain't no way we gonna lose. I done made a profit and it's way before noon. Way to go, dude, come and learn how to trade stocks. We rentless with the attack when this thing pop. We market warriors and we can share the same pot. I woke up and went to war in my tank top. Thanks, Pops, he an analyst, a veteran. And we ain't hating on them other dudes, we better than. I was down and then I learned about leveraging. And after that, I ain't never went red again. Green, right? It ain't bad, it just seemed like something wrong with you if you say we ain't tight. Get in and get out before you think twice. Let's have a toast, you bring the drinks and I'll bring ice. Defeat's nice in the traders war room. What you wanna do in the traders war room? What you wanna do? This the traders